Welcome to the Lady Landlords Podcast. Today, we're highlighting some of the best advice from our expert interviews from becoming a full-time investor to tax planning to using your IRA to invest in real estate. Let's dive in. Here's Jamie on his leap from full-time employee to full-time investor.
The question I always ask is they're like, okay, hey, I've got this job. I make all this money, but I don't know what I would do. I just don't know what I would do. Like, I've been studying real estate, but like, what's the right one? This might not be the right market or whatever. I don't know what I would do. Amazon store, Cody Sanchez says buy businesses, whatever people say. But I always ask people, all right, well, what do you like doing? And they always pause. They always pause. And then I say to them, you're not asking yourself what I just asked you. They're like, well, what do you mean? I said, well, I asked you, what do you love doing? What you're asking yourself is, what do I love doing that I could see making money from? Like, I didn't ask that question. So what do you love doing? So I spent 21 years in corporate America at a company called Progressive Insurance. Most know it. Climbing from low-level claims adjuster to supervisor to manager, and eventually to an executive position. So made a few $100,000 a year, equity, bonus, corner office, the whole nine. But about 17 years into that 21-year journey, something kind of felt like it was disconnected for me. And I started to explore alternatives, options, just because I don't know. I couldn't imagine being able to quit. Wife, kids at home, my wife doesn't work. But I thought, I got to at least try. Real estate made sense. It was practical. You could see the path, rich dad, poor dad, all the things. So I started going down that path. We burned a couple of duplexes and it was like, that's a lot of work. Let's go to the multifamily side, and bought a couple of multifamily and really went down that path. But along the way, even with real estate, like, I love what real estate does and I'm still involved in it today. But the business of real estate for me was less inspiring. It was like, that feels like more of a job. I don't like this job. I don't want that job either. But what was really interesting was I had built like a networking community within the multifamily space. It got a lot of publicity, like you, Bigger Pockets alum. I was on episode 432 or 6 or something like that. And the episode was about how to network in real estate. It wasn't even about buying real estate. It was like how to network in real estate. So I kind of got a bit of a brand around networking and connecting and all of that stuff. And that was great. But after a while, even that was like, all right, I don't know how many more times I can have a conversation about cost segregation or whatever, like, oh, NOI, So I really enjoyed the topics when they turned to mindset, goal setting, those sort of personal development principles. And so I sort of took a step from being multifamily networking guy to more broad, I guess, personal development guy. And along the way, I opened a community. I started a membership, and that community gave me a lot of fulfillment. And I wasn't really making any money on it. But at a certain point, this was 3 years ago, almost to the day as we're recording this. So April of 2021, I just decided I'm going to quit. So I quit the job. I went all in on this community. I had a podcast, still do, called Tribe of Millionaires that I was running as well. And with a runway, a little bit of passive income, and a dream, I guess, I said, I'm going to take this shot. And what's the worst that happens? And I remember a moment where I was like, all right, so if it doesn't work, I'm going to have to go back and get a job doing what I'm doing right now. That is the worst case scenario. So in essence, my current life is the worst case scenario. So can't get any worse than that. So why not take the leap? So that was the decision. So flash forward a year after I quit and realized I wasn't going to go broke. We had a vision, a dream of living somewhere in the world or traveling for a few months with my family anywhere in the world. And we came down here to DR after COVID, or maybe during the end of COVID, I should say, for a month. And we're like, wow, maybe we just move here. So that was January 2022. August of 2022, we made the move down, and we've been here ever since.
Here's Amanda on how to start tax planning.
The reality is, if you're only meeting with your tax person in April to talk about last year's taxes, there's really not much you can do to strategize or save on taxes last year. They're basically just going to report what you did or didn't do on last year's return. Right. That's pretty much it, right? So when you think about planning, that is meeting with your tax person before you sell a property, before you buy a property, before you start paying your kids to help with the property, and really think about what are some of the best ways to do it so you maximize the tax benefit legally. So I think 2 questions that are very important, right? One is, do you do tax planning? Because we just talked about all accountants do tax return filing. You can get that done anywhere, but not very many people do tax planning. And just from an investor's perspective, again, it's really important to understand when you are meeting with your tax person in the next couple months, right? Between now and April, you're going to file your tax return. Don't use that time to do tax planning. And I think for a lot of taxpayers, we assume like, hey, you're filing my taxes for last year. I'm sure you're going to tell me what I should be doing better. But we know based on experience that doesn't happen. Because for a CPA, this time of the year, everyone is busy. You're just trying to get tax returns done. you might have 80 returns you're trying to finish in the next couple of days or couple of weeks. So that's not a good time to do planning. I always suggest you set up a second meeting with your tax person outside of tax season to really sit down and take the time to go through planning. So when you're interviewing, the question is, do you offer tax planning services? What's the cost? What does that look like? I mean, you want them to have a really good explanation of that process, right? Again, not just, sure, we can do tax planning. What are your questions? That's the worst thing for someone to say, because what are your questions means I'm not going to give you anything. I expect you to tell me your question.
I would be sitting there and be like, my question would be, so should I ask about tax planning, right? Like that's not my expertise. That's not my world. So I love that you said that, Amanda, because that's really important, that we need people that know the right questions to ask to get the information from us rather than us being like, so what should I do for tax planning? That's a really, really great point.
It's funny because I hear that all the time. People say, yeah, my CPA said they do tax planning. And then the follow-up is, well, what are your questions? And so I think from the investor's perspective, my question is, how do I pay less tax? Again, that could be a generic question. So CPA is like, well, I don't know. Like, what are your other questions? And I think people are surprised to find out that when we do tax planning, even if the clients, so the first meeting we have on the planning side, a lot of times people come to us with questions like, how do I write off my kids? Right off my home office, and we just say, oh, this is great. We'll cover this, at some point today. But first, I need to get to know you. And so we have a list of questions that we go through with clients. And then we kind of dive down at the end into, how do I pay my kid, right? Because that's one piece of the strategy, but we don't want to start there. We want to ask better questions so we get the overall picture of the strategy.
Here's Matt on how to use your IRA to invest in real estate.
So I had a lot of real estate clients, just from everyday real estate investors buying a single family rental, got a day job, to big real estate developers doing large projects. And so I was helping a lot of real estate clients as a lawyer. And this is way back in 2006, and I had a client coming to me that wanted to use a Roth IRA. He's like, hey, I want to use a Roth IRA. And I'd help some clients use a retirement account to buy real estate. And I kind of dabbled in it a little bit. But the turning point for me of like, wow, this is pretty freaking cool and I need to do this, was just this guy who wanted to use $10,000 in a Roth IRA. That's all he had. He's a successful real estate developer, and he wanted to go to an option contract on a piece of land. He wasn't going to buy it. He just wanted to contract an option on it. So he paid the landowner $10,000 for an option that said, within 5 years, I get to buy this property for a purchase price of $450,000. Now, the reason this guy wanted to do this client who's a developer, and he knew that this land, which was against a highway, was going to become freeway commercial because the state and county were going to put in an exit. That was planned out in the next 3 years. So we got the option and the right to buy it at $450,000. Now, the property was only worth like $350,000 max. So the landowner was like, cool, I'm going to take your $10,000 from your Roth IRA, and I have to sell it to you for $450,000 within 5 years. If you decide to. And he's like, and I'm totally willing to do that. So he's like, what's the downside for me?
Right.
Yeah. So the client gets it in his Roth IRA. So his Roth IRA pays the $10,000 and I help him do the transaction. Well, 3 years later, that exit goes off of the highway and this property turns into highway, freeway, commercial property. It's now worth over $1.5 million. Now my client's Roth IRA has the right to buy it for $450,000. And he's paid $10,000 for that right. What he did was he sold the option to another developer for over $1 million profit. And that $1 million went into his Roth IRA. Well, this is a sophisticated client. He could have done that deal personally, but he decided to use a Roth IRA because that whole $1 million went into his Roth IRA from a $10,000 investment, zero tax. And that was the power of a Roth IRA. And I started getting a lot of clients that want to use Roth IRAs in particular because they're totally tax-free accounts. And so that was kind of like the connection of all my tax background and then real estate. I owned a title company too. And like all this stuff came together. And I'm like, wow, adding in all these concepts together for the right type of client, a real estate investor, it could be a super powerful strategy. But what happened in that deal is when he was selling the option for over $1 million to some other developer, because that developer was willing to pay over $1.5 million. And now he had the right to buy it at only $450,000. So he was willing to pay my client the $1 million for this option. So my client was calling me to make sure all was, I's were dotted, T's were crossed, and we were going through the transaction, make sure it was right. And I'm like, you're good. It's all good. He's like, okay, great. Well, we ended the conversation. He got all pissed off. And I'm like, why are you pissed off? I mean, I was hoping for some high fives, some attaboys, and he was super grateful for me. He's got a $10 million account with us, and I worked with him for years since. But he was pissed off because he's like, you know what, Matt? I have the big CPA firm, the big law firm, big financial advisor at the name brand institution you know, and not one of those bozos told me I could buy real estate with my retirement account. They know I love real estate. They see my tax return every year, and then I've built wealth and had significant income from real estate. And these morons were telling me to buy mutual funds with my retirement account. He's like, I had to self-discover this, and I'm pissed off that no one told me about this 20 years ago. And so at that moment, I was like, you know what? I better get on this, because there's a lot more people out there like him that love real estate, that think they could do better in real estate, whether it's a traditional IRA or a Roth IRA, I don't care the account type, but they can grow this long-term wealth better in real estate than they could just buying a mutual fund they don't understand.
Thank you for listening to the Lady Landlords Podcast. If you're feeling stuck in your real estate investing journey, visit lady-landlords.com to book a 15-minute orientation call with me and see if you're ready to join our mentorship program. Or you can subscribe to our newsletter and join our Facebook group for exclusive real estate investing tips and offers. Invest with confidence. Become a Lady Landlord today.